I have a handful of questions for him, but first, go and give yourself. Got one mic too, so pass it around. Awesome. Brian Briscoe, originally from Salt Lake City area, and that's what we're doing. All of our investments, multifamily value add is our bread and butter, and typically like to take C-class properties and turn them into B-class. And other fun fact: 20 years in the Marine Corps. So I retired 3 years ago last week.
Thank you for your service. Craig McGrothner with Lone Star Capital. I'm the Director of Business Development, so I do capital formation, speaking to investors from a $50,000 check writer all the way to trying to raise the $10 million checks. Worked with a lot of people in this room, so it's great to see a lot of familiar faces. We're based in New York City, of course, but I live in Phoenix, Arizona.
Mike Sullivan, Aspen Funds. So similar to Craig, head up capital development and investor relations. Based out of Kansas City, we're multi-asset class, kind of ranging from debt, credit, a bunch of real estate equity, as well as oil and gas funds. So.
Cool. So let's first kick it off with talking through how do you differentiate yourself in marketing, and what brand do you work on, showing to investors, showing to social media, showing to your content?
So as far as investments, kind of my journey, I started with a company that the focus was the Southeast, right? And after 10 or so acquisitions, we realized that we literally could not drive from each property, 10 assets across the Southeast. It took us 3 days to do property tours and to do everything. And so, that was my beginning, but I left that company. And so when I formed Streamline Capital a year and a half ago, one thing that I wanted to do was absolutely focus, so instead of, hey, we'll do C-class and sometimes we'll buy B-class apartments, and, we've got a 12 unit, but we like this 144 unit as well. We were all over the map in a lot of different ways. So one thing that I do is focus on Salt Lake City. So, if you get a deal for me, it's going to be in the Salt Lake City metro. It's going to have a value add component. It's going to be, C-class in a neighborhood that's growing. So we like to keep those things constant. And so people will come to know us as, hey, we're the Utah guys. And I think the best part about that, best ever conference in March in Salt Lake City, I walked into the Hyatt Hotel. The first person I saw said, hey, it's Mr. Salt Lake City himself. And so I think that part of the branding, I want people to know that I'm the Salt Lake City multifamily apartment guy.
Yeah, that's awesome. You talk about branding, and to that point, our branding, I would say largely is what we like to say is best in class, and kind of one of our firm mantras is actually doing smart things with smart people. So we try to be sophisticated with everything we do. We've got the nice fancy office in the One World Trade Center, but then above and beyond that, we also, I think, usually dress really well. I'm actually dressed pretty casually for a conference. I have no tie right now. Rob has a tie, but he granted me no tie access for this one in Tampa Bay naturally. So I feel lucky about that. But, really being best in class with everything that we do, with our underwriting being sophisticated, our data rooms, things of that nature. Every component to what we do has a why. So it's justifiable and explainable. It's tough to send over deals, send over, materials if there's, just pieces in there thrown in there willy-nilly. So everything's very buttoned up and professional. So that goes through everything with communication, following up, calling people. Everything is systematized and, really high level to attract and give, kind of a $50,000 check writer the same experience as a institutional shop like Starwood Capital would get. So that's really important for us to give everyone an incredible first class, best in class experience.
We have a unique challenge that's a little bit different than these guys. They've obviously kind of niched down into something a little very specific. If you're going Lone Star, you're getting multifamily Texas, you're getting real estate in Salt Lake City. So for us, multi-asset class, diversified around the country is not niche, right? So how to communicate that in a way that makes sense to investors. So really our messaging is macro-driven alternative investments. So a lot of the content that we push out, a lot of the nurturing process with our investors is really taking them from that high level investment thesis and then distilling it down into these asset classes and then more specifically into offerings. So a lot of what people know us for is a lot of our economic forecasts. Our partners push a lot of that out and pretty much everything that we do is centered around that. So it's a unique twist on being able to do a lot of different things, and that's kind of become our niche in a way. So.
And just to add on that, I feel really lucky to be with Mike here because, funny enough, we've actually sent fund managers, other investors back and forth to one another because really a lot of the experience is about giving the capital manager, fund manager, or investor a good experience. And sometimes what we have to offer isn't a fit for them, but making it about them and passing off with friends in the business is invaluable. And we both probably converted, clients off one another, which is a really cool thing.
So I know Rob mentioned this earlier today too in his talk about there are certain investors you just don't want in your deals. And I'm sure, you've all been in this space long enough where you've had investors, you've had things go not as planned, right? Walk us through a scenario in which something didn't work out as you planned and an investor was not thrilled. Like, how'd you handle that? What was the communication like? What was the experience like? And how'd you go turn someone from unhappy customer to either calm unhappy customer or ideally a promoter?
I'll kind of a recent example, and I wouldn't say that I converted this person into a happy customer. I think it really became clear that this is not the right customer. So this was a firing situation. So long story short, we've got a debt fund. He just wasn't finding the information as quickly as he wanted on our website. And then he decided, I'm uncomfortable, I need my money back. And, within half hour, whatever it was, we had returned his call. We happened to be in a meeting, whatever. And had a quick meet with our team internally. I said, this really is a guy who's got maybe $50,000, $100,000 with us. He hasn't done any reinvestment in the last several years. He's obviously uncomfortable about something. And his comments were, when I go on Schwab's website, I have this and this and this and this. I was like, this is not our customer. We're not Schwab. Nobody in this room is Schwab. So he very quickly kind of highlighted to me what his expectations were. And we were, very, very professional, but said, happy to send your money back. We want you to be comfortable. So he was happy in that sense, but ultimately it was like, we're not going to spend time on this customer. And so we just handled it by getting rid of him and not dragging it out any further.
So I'd say this is less of a specific experience, but I think we've had a lot of times, and everyone can relate to this, where you've got investors, capital raisers who email and it sounds a certain way, but if you actually call them, the tonality and the conversation totally gets flipped, and they might have a cultural difference, they might be stressed that day, but if you actually take the time to call and spin that around, you can, with large certainty, actually flip that into a positive situation. And they're always friendly and nice. It's kind of the thing where people always, are keyboard heroes, but then in person, everyone's super friendly. So to that vein, so many times I've had people that maybe have certain tonality or it feels cryptic, but then I give them a phone call and explain, and they're excited and ready to go. But similarly, you have to ask them good questions and qualify people on the front end to make sure that you actually want them in your capital stack and that you want to be effectively in a relationship with them for, call it 3 to 7 years. Particularly right now, it's super crucial because I think most people have been doing deals from 2020 to today, essentially. If you're buying at every point of the cycle, and not every deal is going to go as advertised, unfortunately, and that's a lot of stuff that's out of your control. So making sure that they're a good front end customer will solve a lot of wounds. But the other thing to think about too is just truly never over promising people. And a way you can do that is, really just being transparent about what it looks like and, I guess explaining to them how it could go wrong up front, not only talking about the upside as well.
Come to think about it, I didn't have to go so far back, just 2 weeks ago. Now this particular investor came from, some paid leads that we were doing. Got on the phone. This is probably the third phone call we had with him. So one of my team members, took the first couple of calls, and call number 3, he wanted to speak with me. So we're talking with him, and one thing he kept on going back to is, first of all, the dollar amount he wanted to invest was $250,000, and he said, I've got this much money in a similar deal, and he kept on going back to the fact that the sponsor of the other deal gave him a personal guarantee, personal guarantee. And I started out thinking, well, I'm not going to give you a personal guarantee. And I started explaining why I wasn't going to do it and everything else. And he kept on going back to it. And, finally, I just, it clicked in my head that this isn't working. I'm not convincing him, and he's definitely not going to convince me to give him a personal guarantee. Yeah, I basically said, look, if that other guy is willing to give you personal guarantees, go talk with him. And I basically very, very casually kind of pushed him away, is what we ended up doing. But, if he's asking for a personal guarantee and we don't give him one and things go bad, it goes back to, what we're saying, vet him first. What type of storm is he going to create later if we were not quite meeting his expectations?
If keyword doesn't exist too.
Yeah,
Real estate.
right. I mean, personal guarantee. That's worth about what the paper's written on.
Yeah, it's a terrible investor.
Yeah. So.
Well, yeah, the personal guarantee is something that I would not touch.
No.
So to get more tactical, when looking at launching a deal, right, walk us through that process from start to finish of how you launch it in terms of the capital stack, your marketing material, your investor campaigns, your calls, etc. Like, what does it look like for you all from deal under contract or deal under LOI to ready to go?
Well, first thing, I like to stretch with our deals, so, I've got a very small team there. There's 3 of us right now. Started the company about a year ago, so we're still pretty small in what we can do. And internally, we can only raise about $1 million to $1.5 million, per deal, and that doesn't buy us what I want to buy. So, the first thing that I do typically is I look for fund managers and I look for people who want to come in co-GP and try to get that team together first. So my first set of marketing is out to people. I keep a list in my CRM of potential co-GPs and fund managers. So the first email goes out to them, trying to recruit people to help raise money for our deals. And then, once that team is together, our capital stack's pretty simple. We're still doing deals, $10, $20 million. So, debt and common equity. But, inside that common equity, we are splitting up different shares, different classes of shares, so a year ago we did a deal, we raised $5 million. We had 1 class of shares. We probably had 10 people that wrote checks larger than 100,000. But the largest check was 200,000. So on our subsequent deal, we brought in a second class of shares, with better returns starting at 250, and we got more checks at 250 than we got checks, above 100,000 on the previous deal. So that is one thing that we are going to be implementing in every deal going forward is different classes of shares, and the way we structure it is we want to incentivize people to reach a little bit deeper in their pockets. If you can invest 200, you most likely can invest 250. We want to give them a reason to go from that 200 to 250 mark through either a higher pref, better split, or maybe a little bit of both.
Yeah, so not too dissimilar there. So what we'll effectively do is we'll get a deal under LOI, and then between the LOI and PSA process, I'll send it out to all the capital groups. We've been really leaning away from institutional groups and more into that, kind of that bespoke boutique fund manager, that $1 to $5 million check range. So I'll send it out to our typical capital stack. Since we're doing, deals north of 40 million, it's gonna be about, call it 12 to 20 million in equity you have to raise. We'll internally raise about 3 to 5, I would say, on the average deal. And then we got to fill in that gap. And then I would say in the market right now, as everyone can appreciate, not everyone is going to hit their number, unfortunately. Hopefully with good economic news coming up, rates getting cut, that will change. But then we'll basically solve for that, call it, if it's a $15 million raise, we'll look for that 12 million. And then numbers are unfortunately going to change to getting to your retail investors, your in-house investors, as you're kind of mentioning there. So we want those numbers to be fully baked before getting out there. And usually that's hashed out. We'll get, a soft debt quote, and then we'll send it out far and wide blast. And then during the raise process to go to the next step there, we'll send the deal out. We will, send out, a email registration for the webinar. We'll send out the webinar. We'll send a text message before the webinar. And then the webinar is always on Thursday, either 2 or 3 p.m. Eastern. And then that following Monday, I will call every single person, essentially, unless I know they're maybe another sponsor or just someone that doesn't really make sense for us to do business with. Maybe they're trying to get prep, something of that nature. We're not really taking that in our capital stack. And then I'll call everyone there on Monday or Tuesday get that all out there, and then we use a service, and this is a good note for a lot of people, called Phone Burner, which it will send a voicemail and an email and a phone call if they don't, or I'll call them, and then it will email and then send a voicemail there. And I can basically do what would take me 2 weeks before in about 5 hours. So I'll call about 300, 400 people in a day, all automated in that sense on a phone dialer, and then follow up with them accordingly. And then I'll also have the email thread there with them. And then I'll just basically follow up in that thread, and it'll look like kind of like I'm talking to myself. But if you send it once, maybe it looks like it's spam. If you actually go in there and email them again, you get a better response rate. So that's typically how the process works in a raise, I would say. Soup to nuts takes about 90 days from LOI out to closing.
So I'm going to kind of like zoom out even a little bit more, because I mean, our process really is about, again, macro-driven investments. So we kind of build an investment thesis for an asset class. So really a launch of a deal really is about the asset class itself and the case for why we would go after that. So really a lot of our messaging starts there. And it's really taking our investors kind of on a journey through our marketing down into, hey, here's a thesis for this asset class. So we generally would launch something more broad, like a master class, where we bring ourselves as well as some outside expert into a non-deal webinar type of format, where we're talking just more generally about oil and gas, for example. So we bring in an oil and gas consultant, and they're giving us the lay of the land as to how does this industry work, because a lot of investors, they really just don't know. They don't know what they don't know. And so the masterclass is really designed to give them the education, fill the education gap, and ultimately translate into something that we already know is coming. So, not dissimilar to these guys, once we go under LOI on something is when we're really starting to create the messaging specifically for that deal. Kind of unique things that we might do slightly different is that we would really push from the master class that's usually timed roughly 3 weeks ahead of an actual deal webinar. So we haven't really told anybody about it outside of maybe in the master class we'll say, hey, just keep us in mind, there might be something coming. So kind of leave a carrot there. But that's usually 2, 3, 4 weeks ahead of what we know is coming from the deal. So now that we kind of move through that LOI into PSA is when we'll actually push to a live webinar. We find live events online are really successful. We get a better turnout rate doing that. Of course, they're recorded, and then you've got a bunch of content that you can push out from those webinars. So tactically, that's been very, very helpful for us. And then we continue to push to kind of more live Q&A type of events in kind of the subsequent events. So that's kind of more the marketing side. On the kind of IR sales side is the call to action always is some form of a commitment. So we generally push out a soft commitment that allows us to kind of filter out who are the people that have, who are interested, who are the people that have digested the information, who are soft committed, they're still deciding, and then who are those that are fully committed. I don't really need to spend a whole lot of time. It's just, a quick call. Hey, got your commitment. My admin team will be in touch with you. And similar to you, Craig, we use a lot of kind of automation technology to try and reach the breadth of our investor base, because we do have a large investor base. So, but those would be some of the unique things that we do in advance of that launch, and then really leverage as much automation as possible. I mean, the technology that's available now is, far and away beating, even 5 years ago. So I would say anybody that's not leveraging automations, AI, a powerful CRM, that's, I would say, the biggest missing piece in your process of launching a deal.
Yeah, and just to add to that there on the missing piece, CRM is great. You have to have that there, but there's no substitution for stuff like this. So thank you for hosting such an amazing event, but it's meeting people and actually getting face-to-face is what's going to drive the best results too for your raise. So got to raise capital before you're actually starting to raise capital.
Well, one more tactical thing I forgot to mention. So we also have an investor club. And so we're trying to kind of create higher buy-in investors. And so kind of there's no real cost for them necessarily, but the commitment is that they would fund a deal a year. And so in exchange for that, we are going to give them early access. So we've kind of created these different buckets, And we'll give, with our fund managers, we generally launch a deal about a week ahead. So they would get first look at a deal coming. Fund manager could say yay or nay, and we can create a carve out for them. Then our investor club are more those retail investors who are more dedicated, and they get 48-hour early access. So then we get those soft commitments there. And all these are marketing pieces that then we're pushing out in subsequent emails. That, hey, we've had a huge response from our investor club. Now we're in our public launch. Or you can leverage the public launch with your investor club to say, hey, last couple hours to get your commit in, investor club, we're going to go public to our broad list of 30,000 emails. So, get your commitments in today. So we can kind of use those things against one another.
Cool. And Mike, back to you on this one. So Aspen Funds does a variety of deals in terms of the type of asset class, structure, partners, and who those deals are with. How do you differentiate those deals to an investor, right? Say Joe calls you inbound lead from your podcast, website, whatever it may be. How do you really help them align what's best for them and kind of position your deals versus each other? And then for Craig and Brian, how do you position yourself when looking at you versus a competitor in the market in terms of how you differentiate when they say, hey, we've talked to so-and-so, we're talking to you now. What's your big differentiator? Start back with Mike.
Yeah, usually if they're engaging with us, they've responded to something specific, which is, some type of fund that's doing X purpose, right? So that's how they've heard about us.